Okay, welcome to the Swing Trading with Cycles channel. This is our update on Dixie. It's December 7th, and really this whole week is the week before the big FOMC announcement for December, the December rate hike. Everyone is expecting 50 basis points, and we also have our inflation reading. So you would expect that not too much is going to happen over the next few days. So we have 2 days left of trading after today. So today is Wednesday, and then we have Thursday and Friday to close out the week. But let's look at where the dollar stands, the Dixie Index, I should say. And so we've got this like just a perfect, just freaking perfect downtrend here on the daily chart. I mean, look at this thing. Up. Well, actually, it's not perfect because that's not a lower low. But I mean, look at this thing, right? And so you expect at some point we get up to here maybe. That's why I've drawn this line here, that we wouldn't really expect to go any further than that before making another lower low. And so at this point, and I'd say this is about pretty much all of the indices, all the asset classes, they're waiting on the December 14th announcement, again, which will coincide with the CPI release, for their pivot point. In the case of the Dixie, I believe that pivot point is going to be a daily cycle high. So we will print a daily cycle high on that day and then begin to roll over. For the broader markets, for stocks, that likely means a daily cycle low. So that makes sense. They'll kind of move in inverse directions. And so we're probably going to drift higher for the next couple of days. But notice, this is day 2 of a new daily cycle. So, or I should say, it looks like day 2 of a new daily cycle. You can see the other rallies petered out right around here. But theoretically, we would get a close above the 10-day moving average. We're not going to get that today probably based on, and this is the 10-day moving average, this line here, based on this red candle. But notice, this candle hasn't made a new low versus yesterday. So we're kind of holding steady here. And these 2 days become consolidation of this day. So we expect, again, at some point you're going to get a daily cycle low. You're going to get a couple days rally. And so it would make sense that we get a little drift up into our big catalyst next week. And if we move to the weekly chart, we are green on the week, but we've got a little bit of upper wick now because of this pullback that we're seeing. And this puts us on week 27 where we have made a new low. And so this could be our ICL. Again, it could also be another lower high within the weekly cycle. And so we're going to have to, again, I think the 2 big catalysts next week are going to decide our fates. And finally, the monthly chart, same kind of picture, important to observe, to know the swing high level. So the low from September was 107.68, right? And so we're well below that here. And so as long as we stay below that, we remain a monthly swing high. And more importantly, if we close the month below 104.636, that is a swing high for the quarter. Now we're obviously above that now. We're at right about 105 right now. But my expectation again would be we continue to drift a little bit higher into the catalyst next week. And then we begin the daily cycle decline again, which should get us to a close below 104.636 by the end of the month, signaling this becomes a swing high, a quarterly swing high, just like this big quarterly swing high and this one. And so we would expect that we begin many months down. So basically all of 2023. So that's the Dixie. It's very simple. We'll see if much happens the rest of the week. We probably won't have an update for the rest of the week unless something big kind of happens. Because again, the market is just kind of waiting on that catalyst from next week. And I'll look at TLT as well. So my God, look at TLT, man. So let's look at the weekly chart first. So this is week 6. 1, 2, 3, 4, 5, 6. So making a new high here on week 6. Remember, last cycle topped out on week 7. So, but this one is definitely much more robust. I mean, look at this last weekly cycle rally. What was the percentage gain on that? This is clearly a bit of a character change. So we rallied 11%. And here we probably rallied over 20% already at this point. So just closing in on it, about 18%. And you can imagine the 110 area becomes a pretty solid psychological level, and it gets us back to like this low here. So I wouldn't be surprised if that's where we kind of take a breather. And as I discussed for the Dixie, what I said in general for assets, we're probably going to have a turning point next week. And so at this point, given the trajectory, it's starting to look like the TLT is going to make a high going into the FOMC meeting next week, and then it's going to decline into its daily cycle low, and we'll have to see how mild or how extreme that is. And if we, speaking of the daily cycle, we're expecting the daily cycle high any day now. And that's important to know. It's a little dangerous to chase it here. So let's see, what is today? Today is day 31. And ironically, the last major daily cycle, like the last very clear daily cycle that we had, also topped out on exactly day 31. Like you can see it drawn here on the chart. And again, so that cycle, that rally is actually the same rally we saw in the weekly time frame. This is just the daily version of it, and we know that was only 11%. And here we've rallied a full over 18%. So at some point we're going to get a cool down. And also be aware, we have this gap below, and as I always mention, gaps tend to get filled. Let me just make that line black so we can all see it. But you kind of have a gap. So basically, it starts at 108.20 and ends at 107.39. So about a $1 gap, more or less. Important to be aware of that, because that gap is probably going to get filled. We probably make a move down. So like, maybe something like, and we could very well rally for a few more days and then come down and fill that gap before resuming higher, right? Again, stair-step fashion. And the monthly chart, well, I should say, if we look at the quarterly chart, look at this bad boy. Look at this quarterly chart. So it wouldn't be crazy if we somehow rallied all the way to 121 by the end of this month, and we close as a quarterly swing low. That would be huge. I think that's a little bit unlikely. If you look at the monthly chart, though, you can see we've made that monthly swing low that we've been talking about, that I've been tweeting about. And so as long as we stay above what is that level? $104.68. And you could see a world where we get our daily cycle low and we pull back to right around there, right around like the 104 level. That'll keep this beautiful monthly swing low intact and make October our potential long-term cycle bottom at month 19. And this would be month 2 of a new cycle. I'll just add that to the chart here so that's clear. And notice through all of this, we're still below our 10-day moving average, or excuse me, our 10-week moving average. So you would expect at some point price is going to at least close above that. So that gives you another kind of upside target, another thing to watch for. Like, okay, we checked all these boxes, might get a pullback. And that 10-month moving average is, let's see, where is it at this moment? We're right around the 112 area. So you can see an overshoot there to that level before we'll pull back into a daily cycle low. So we'll leave it at that. That's our update on the DXY and TLT. And as I said, we'll update on Twitter if smaller things happen. If something big happens, we'll definitely put another video out. But expecting next week to be the real fireworks when we get that FOMC meeting and the CPI print.